Hey everyone, Jeff Dorman, Chief Investment Officer at Arca, back for another edition of That's Our Two Satoshis Live, joined again by Nick Hote. You're becoming quite a fan favorite, I think, Nick. Welcome back.
I'm glad to hear it. Hi everybody.
I think as long as Ethereum is in the headlines, you're going to be a frequent guest here. So, before we get started, as always, read a quick disclaimer. This commentary is not intended to be investment advice, investment research, or a recommendation. Please consult your investment professional for your own circumstances. But for those who have never seen That's Our Two Satoshis Live, basically every week for over 4 years now, we've been writing a blog called That's Our Two Satoshis. It's available on our website, ar.ca/blog, talking about events in the digital asset market. And then we talk about it this week. So this week it was all about Ethereum, as you can imagine. I actually, if you look at the blog, if you go in there, we didn't go into a lot of detail, mostly because for the last few weeks we've been talking about it. In fact, Nick wrote one of ours a couple of weeks ago talking about how the risks of the merge were completely overblown. We also talked about why Ethereum is probably the most no-brainer investment for most new entrants to digital assets now, given that it's really become kind of the poster child for all of the different areas of blockchain growth, from DeFi to Web3 to gaming to NFTs. But what we talked about this week was really just talking about what the math looks like post the merge, as well as just how much of a technical achievement this really was. I think us non-developers kind of just say, hey, the merge happened, great, but obviously there's a lot that went into this. So Nick, why don't we start there? I put a quote in the blog talking about what Galaxy Digital said about just how impressive of a technical event this really was to be able to pull this off for a public blockchain. But what were your thoughts just in terms of how the merge actually went? Whether it was faster or slower, or had any hiccups or anything specific around the actual event.
Yeah, as someone who was in all the developer calls and like really tracking this very in depth for months and months and months, you get a little bit worried that you're in the same spaces as everybody, and maybe there's some element that everybody's really optimistic about this thing, but truly, if anything, I think the most of the devs and people who were really understanding this closely were too pessimistic, because it really exceeded everybody's expectations, kind of how fluidly this went. To have it finalize on the first block, that basically means everything was perfect, better than any of the test nets. So yeah, certainly like an extremely complex technical thing to do. And as far as like an investment perspective, I think this really de-risks Ethereum as like a technical, from a roadmap perspective. There's certainly other changes on the roadmap that are significant, but nothing to the technical extent of switching consensus mechanisms.
So if you are an Ethereum user or an Ethereum investor or just an outsider cheering on the success of Ethereum, like what's next? We always talk about ETH 2.0 was not a one-day event, right? This is a process. What does the timeline look like? What do we expect next in terms of kind of the growth of Ethereum, either from an investment standpoint or from a scalability standpoint? What are you looking for?
Yeah, so the last year or year and a half have all been about Ethereum, cementing ETH as a monetary asset, and that was between EIP 1559, which introduced burning of fees of ETH fees, and then obviously the merge, which increased kind of the economic sustainability by decreasing the issuance rate. They were all about making ETH the asset into something valuable. Going forward, the focus turns very heavily towards scalability. And so the near-term, proposals that will likely come into fruition over the next year or two are going to all be about pushing as many people over to layer twos as possible and reducing the costs for those layer twos dramatically, and really just being able to create a system where Ethereum more closely rivals some of the other layer ones in the ecosystem, and has the ability to onboard these millions of users and process the transaction rates that competitors like Solana, Avalanche, etc. do.
Yeah. So let's get to what people really care about. Let's talk about the price of ETH. So I think, well, I've been on record a few times. I think most of you who have heard me before have talked about this. Like I always thought the Ethereum as an investment was a two-part trade, or really a three-part trade, right? Where part one was the lead up to the merge itself, right? Sometime around mid-July, we got confirmation from the Ethereum developers that the merge was a go. It was actually going to happen. We even had a pretty detailed kind of understanding of the date or the range of dates where the block would fall, where the merge was going to happen. So that was the first trade, right? Long ETH. We saw that if you look at the ETH Bitcoin ratio as a proxy, ETH Bitcoin almost up about 30%, I think 30 or 40% over the course of like mid-July to up into the merge itself. So that was part one. I think a lot of people got that part right. Part two was the real unknown, which is what happens in and around the actual merge itself. And ETH was down about 25% last week, really in 4 days, right? 4 days post the merge, ETH fell 20 to 25%. I think that was, certainly within the realm of possibilities. I think it was definitely more of a move lower than I would have expected. Quite frankly, I didn't know if we were going to move higher or lower, but I thought it would be much more muted than that regardless. A lot went into last week's price action, right? Some of it was the fact that we had another pretty bad macro print with the CPI. So you already had equities falling 5%. You had treasury yields rising, the dollar rising. So you had a lot of headwinds regardless. But really, Ethereum underperformed. And I think some of it was just because of the unwind of the arb trade, where a lot of people were going long Ethereum spot, short Ethereum futures, trying to get the proof of work airdrop. Some of it was just, buy the rumor, sell the news. Anytime an event is over, usually vol collapses and people exit positions. But still, I think down 25% was a pretty big reaction for what was, again, a pretty landmark event. Certainly didn't expect that kind of price action. And I would venture to guess a lot of that will be retraced in the next few weeks here. But really, the third part of the third step of the merge is really where I think it's most interesting. And that is, being long, do you want to be long the most pure play blockchain investment when you just look at the math? So Nick, I laid this out in pretty big detail in the blog, so anyone who wants to check it out themselves can. But why don't you walk through the math here, right? What from a supply demand standpoint are we looking at here for the next 6 to 12 to 18 months post merge?
Yeah. So I mean, the big economic sustainability change that the merge did was reducing the issuance of ETH by something like 87, 88%, as a result of just the fact that proof of stake is kind of a more efficient consensus mechanism than proof of work. You don't need to subsidize the validators as heavily as you do with proof of work. So previously you had like 13,000 ETH every day being distributed to miners. Now you only have 1,600 ETH. And so when you consider what EIP 1559, the burning mechanism that burns fees based on demand, is doing on the other side of that, on the demand side, you simply need to have those 1,600 ETH get burned during the course of the day in order to have ETH, the asset, be deflationary. What we've seen in the wake of the merge is kind of falling a bit shy of that. Something like, I think you went from like 3.8% annualized inflation to 0.2%. So essentially net neutral. I think in a bear market, this is pretty natural and normal. I think what the changing policy really does is it makes it much more countercyclical, a lot like monetary policy in the normal economy. But it does it algorithmically, so there won't be mistakes like we see with the Fed currently. So during a bull market, you'll have ETH be much more deflationary because people will be paying much higher fees, and that will be burning a lot more ETH, whereas the supply is constant. And during a bear market, you'll see a bit more inflation, but that's going to, gas fees will be lower, and that will countercyclically incentivize people to, use the Ethereum network.
Yeah, and I think the math matters a lot, right? So everybody right now who's a Bitcoin maxi or who's a decentralization maxi, close your ears right now. But for everyone else who's really just looking at this as an investment class and trying to make money, we put a chart in the blog of some of the best performers during the bull market, really April 2020 to November 2021, and then some of the best performers during the bear market from December 2021 to present. And guess what? The list of tokens that have outperformed in both markets is really small, and they all share the exact same characteristics. It's Chiliz, it's BNB, it's Leo, it's FTT. These are tokens that a fixed amount of supply was issued, at inception, and then they amortize, meaning the supply goes down over time because they're using cash flows to burn the tokens. So meaning, unlike Bitcoin, which is inflationary, unlike ETH, which was inflationary and potentially might still be, but certainly heading towards deflationary. Unlike a lot of these other, layer ones where these inflation rewards just kill the supply if you don't have consistent demand. The ones that outperform in both bull and bear markets are the ones where the supply gets reduced, and that's where ETH is heading. So, if you believe that that is a formula for success, which I do, again, because the numbers don't lie, right? Chili's is a real company with real revenues. Binance and FTT or FTX rather, real companies with real revenues. Bitfinex, same thing. When you have real revenues and cash flows, which Ethereum does through the fees, and you have a mechanism where those revenues and cash flows actually accrue back to the token in the form of buybacks or burns, it leads to outperformance of the token. It's fairly simple math. So I think Ethereum is going to be joining a short list of tokens that actually have really good tokenomics in your favor for a growing company or network. And then lastly, I'll just leave it with, just because we have to say it, I think the anti-ESG campaign that has been going on again around Bitcoin for a long time, and truthfully, we don't believe in that. We think that most of the math that people are showing about Bitcoin being such a energy hog is wrong. Not to mention ESG has 3 letters. It's E, S, and G, not just E. In fact, we wrote a white paper not too long ago. You can find it on our website as well at ar.ca, where we talk about how great digital assets are for the other 2 letters, for social and for governance. But for those who are on sort of the anti-ESG campaign, Ethereum really sets itself apart now from Bitcoin from an energy standpoint, and I think that narrative will continue to pick up. You already saw Greenpeace, amongst others, tweeting about Ethereum being more energy conscious now than Bitcoin. We don't get caught up in comparing Ethereum and Bitcoin very much because we think the comparison makes absolutely no sense. But I think that is going to be a narrative that catches on, especially to new investors coming in for the first time. So I don't want to harp on that, but I do want to point out is how big of a deal is it now that Ethereum and Bitcoin really are separated? And what I mean by that is, unless you're just a talking head in the media or you're purposely saying incorrect information just to get followers, it's really hard to look at Ethereum and Bitcoin and draw any of the same conclusions anymore, right? I mean, these are completely different networks with completely different use cases. They're now completely different consensus mechanisms, completely different tokenomics. It's really hard to draw a comparison between the two. And I think that matters, not because I care necessarily about Ethereum versus Bitcoin, but I think once you are able to separate those two and you get out of this sort of media talking head nonsense where everything just is lumped in together, you start to expand your mind a little bit and look elsewhere in digital assets and realize, well, actually, they're all quite different, right? There's nothing, BNB looks nothing like Ethereum, and, Helium looks nothing like, Avalanche. And you start to clear your head a little bit from this fog of all these assets are the same. And it allows you to go deeper and realize how different and nuanced these different tokens are, whether it's because they have different properties, a company versus a protocol, or it's because they have different token inflation schedules, or they have some are asset backed, some are pass throughs, some are you go down the list, governance tokens, and you can find all these nuances. So what we did in this the second part of our blog here is we talked about all these. Let's get the analogies right. If we want the narrative to switch, where it's not just one trade, it's not just how is crypto trading. You start to actually separate the assets themselves and start to look at, what are these different assets? How do we compare them to the real world to get people comfortable? So we'll start with the most obvious one, right? Bitcoin is gold. Do you agree or disagree with that, Nick? Just very straight analogy. Bitcoin is gold.
Yeah. And I think then you take that, a step further and say, are Bitcoin and ETH even the same asset class, right? Gold is a commodity. What is it? What is ETH? Currency. That, that's a big differentiation from terms of valuation too.
Yeah, I agree with that. So, okay, so Bitcoin, we'll just agree, has the same kind of no intrinsic value, just like gold, but is meant to be a store of value. Has physical hard properties. We'll call Bitcoin as gold. I think that's pretty easy. All right, now I'm going to go to the next one, which I know you disagree with, but I think Ethereum is the Apple App Store. And what I mean by that is, you look at Apple. Apple's been around for 40 years, but really most people didn't care about it till 2004 when they had the first, or maybe 2003 when they launched the first iPod, and then eventually they released the App Store, right? And the App Store on day one only had 500 apps in it. Now it has over 2 million apps. So like Ethereum, it was a blank canvas at first, very, very little in there. There was an SDK so developers could release apps. And then, many years later, now 15 years later, it's a thriving metropolis with 2 million apps and tons of revenue being passed through the system. I think Ethereum's the same thing, right? It was a blank canvas when it was issued in July 2015. They had the SDK. They had some apps that were being built. I think MakerDAO was one of the first apps. And now there's over 4,000 apps. Same thing, like the Apple App Store. Ethereum accrues fees in terms of the activity. And ultimately, if Ethereum becomes the place for developers to continue to develop, then there's going to be a lot more revenues and fees going through Ethereum, which accrues back to the ETH token, just like the revenues of the App Store accrue back to Apple. So agree or disagree?
Yeah, I mean, I don't think I disagree. I think the analogy is a sensible one in like that both the Apple App Store and Ethereum are platforms. They're platforms on which applications are hosted. I think maybe like the kind of idea of like ETH the asset is a little bit different than Apple the stock, but that's more of a a differing opinion. But certainly, just at the face level, the idea that this is a platform versus something like Bitcoin, which is more of a commodity, that's a differentiation.
Okay, we'll chalk that up as a win, and we'll pretend you agree with me fully for a second. So with that in mind, what are the other layer one blockchains then, right? What is Solana or Phantom or Binance Smart Chain or Avalanche? These are equivalent to Android and Microsoft and any of the other competitors to iOS, right? Obviously, once iOS had success with Apple, it wasn't like they were going to have a monopoly. Eventually, all these other operating systems were developed. You could argue that Android was actually built before iOS, but at least from a commercial adoption standpoint, Apple certainly had the lead on Android. I think these other blockchains are the same thing, right? Once Ethereum actually had success, once Ethereum was showing that developers will develop apps on here and there will actually be usage, there will be fees that are going through, you're going to see competitors. So we can compare every other layer one blockchain to every other, non-iOS or, maybe Solana equals Android and the other ones are your, Microsoft and Ubuntu's and others. But, what do you think about that in terms of just broad-based analogies?
I think Anatoly at Solana and Emin at Avalanche might disagree with it, but I think it's pretty fair.
Okay. Yeah, well, I would hope we get some disagreement. So I'd love to hear from them if they are happy to listen to this, with what they think their comparisons are. Okay, but let's go further. I'm going to go further here, right? And I'm going down kind of the list in terms of market cap, right? Bitcoin was number 1 market cap. Ethereum's number 2 market cap. Let's go to the number 3, number 4, which are both stable coins, right? You've got Tether, you've got USDC. Clearly, stable coins have nothing to do with Bitcoin or with Ethereum, right? These are completely different assets. I'd say they're both proxies for cash and credit in the banking system, right? So maybe USDC is more of like the regulated banking cash app, like, the Fedwire fund service, and where Tether is, maybe more global, but less regulated. So maybe that's like Eurodollars. But, more or less, I think it's pretty hard to argue stable coins are just currencies, right?
Agreed. Yeah.
Great. Let's go to number 5 on the list, which is Binance Coin. So I compared Binance Coin to JP Morgan, right? JP Morgan Chase, has about 128 billion of revenue. It has a market cap of about 350 billion. It does just about everything from brokerage to wealth management to asset management to trading. You have Chase, which they acquired, which has rewards, right? You get different levels of rewards if you're a Chase customer, depending on how many assets you have with Chase. To me, that looks exactly like Binance, right? Binance is does somewhere between 20 and 30 billion of revenue every year. Binance has about a $200 billion enterprise value when you combine the value of their equity, which is estimated to be about 150 to 200 billion, combined with the value of their token, which is almost 50 billion. Binance is a one-stop shop. They have trading, they have lending, they have borrowing, they have staking. They do just about everything. The BNB token acts like both a stock in the sense that you get buyback and burns from the revenues and profits of Binance, but it also acts as like a loyalty membership card in the sense that if you use the BNB token on their platform, you get all these rewards. To me, it looks exactly like JP Morgan Chase. And if you believe that, then FTX, of course, would be Goldman Sachs. Agree or disagree?
Yeah, I think the guys from Bankless have a reasonable take on this, which is calling stuff like Binance or FTX crypto banks, which is kind of like the bridge between normal banks and pure like DeFi crypto, where it's all the same banking functions that you get with a normal bank, but you have custody over your assets if you really want them, and so you kind of still have that decentralized finance aspect.
Yep. Yeah, exactly. And we can look. I don't want to spend 4 hours on here, but you could go down the list, right? We could say Helium, which is like a telco infrastructure play. That'd be equivalent to like an American Tower or an SBA Communications, right? The tower companies that power your cell phones. Chainlink is computing infrastructure, just like Intel or AMD. Chili's is sports and entertainment, just like DraftKings. Sandbox or Axie is a gaming platform like Take-Two or Activision. The point I'm trying to make here is that for the first time, the Ethereum merge is forcing the regular digital asset talking heads to think about the uniqueness of these assets. And once you start to do that, you really start to realize how much depth this market has to offer. And I think that's really important, right? Because I do a fair amount of interviews with the press. I do a fair amount of speaking engagement at conferences. And I can tell you almost every time somebody will ask me, like, how is crypto trading, or is crypto up or down today? And I'm just like, it's just a dumb question, right? That's the equivalent of somebody saying, how are ETFs trading? Are they up or down today? And of course, that's an unanswerable question, because the ETF itself is just a wrapper, right? The ETF means nothing. It's what's inside of the ETF that matters. And I think that's how people are going to start viewing digital assets as well, is that the digital asset itself, or the blockchain-based token itself, is just a wrapper. What we put inside of it can be very different. And I'm really excited that Ethereum and Bitcoin are now so different, and that the media and other talking heads are starting to understand that it opens the door for more nuanced and, in my opinion, more intelligent conversations about these assets. So yeah, I'll leave it with you, Nick. Any final thoughts here on Ethereum or kind of the overall market?
No, I agree. They're wrappers, and there's many different asset classes here underlying them. So I've been honestly surprised a little bit to the extent that the media has picked up on that in the last couple of weeks. So it's encouraging. Hopefully that continues.
I agree. Well, anybody from the media, if you're listening, or if you are listening and you have friends in the media, pass this along to them. You wouldn't ask a long-short equity manager about gold every time you talk to them. So please stop asking every digital asset investor about Bitcoin. We don't care necessarily. It doesn't matter. If there's other assets, not to say Bitcoin doesn't matter, but the point is these are just not relatable instruments anymore. Let's separate them. Let's talk about them intelligently, and let's see what happens in a post-ETH 2.0 world. So anyway, thank you, Nick, for joining us. You can find Nick on Twitter. What is it? @Nick_Hotz.
That's it.
All right, great. And obviously, you know where to find me @JDorman81. Thanks for joining, everyone. That's our 2 Satoshis. We'll see you next week.
All right. Thanks, Jeff. See you.